Good morning, hunters. Welcome to the Daily Hunt for Multibaggers, your Saturday deep dive into the market buzz.
That's right. We're here breaking down the latest social media discussions and AI-generated insights from yesterday, Friday, May 15th, 2026, to flag potential opportunities and, some definite pitfalls.
Today, we've got a fascinating mix. Our AI flagged several stocks with significant community engagement, showing a really varied sentiment. We're seeing everything from explosive growth stories to, companies grappling with some serious financial hurdles.
Absolutely. While some names are riding high on forward-looking optimism and strategic plays, others are definitely raising red flags when you dig into those key performance indicators. It's a real mixed bag of promising potential and high-risk speculative plays. Let's get into it.
First up, let's talk about Applied Digital Corporation, APLD. This one's really been buzzing, with some users calling it a template for success, up a staggering 736% in the past year. The market, it seems, views them as a contracted revenue infrastructure bet, especially in the booming AI data center space. Our AI sentiment score, a very bullish +8.
Well, Ethan, that 736% jump is certainly eye-catching, and the 139% revenue growth is phenomenal. But, we have to look at the numbers behind the hype. APLD currently has a negative net profit margin and EPS, and a debt-to-equity ratio over 110% is frankly high leverage. Investors are clearly prioritizing future growth over current profitability here. This stock was rated buy back in January, and it seems that positive momentum is continuing.
True, Brooke, but the news flow is incredibly strong. That $7.5 billion AI deal and new debt facilities, that's massive, setting them up for continued explosive revenue. Plus, significant insider purchasing suggests high confidence from within. Given the growth, the strategic deals, and that insider conviction, our AI-generated analysis suggests buy for APLD.
Next, we're looking at Fermi Inc., FRMI. There was a big post drawing comparisons to APLD, highlighting significant assets and a new management team. Sounds promising on the surface. This is a new name for our podcast, never rated before.
It did present a compelling bullish case, talking about strategic positioning in AI power and a potential $1 billion annual net operating income from a single gigawatt lease. And recent news shows the stock jumped 22% on talks of a new lease deal, following a 43% surge after their Fermi 2.0 plan was announced. There's definite community optimism about this turning around.
Optimism, yes, but the user comments were quite skeptical, challenging the premise and highlighting substantial governance issues. My main concern, the KPIs, we're looking at a negative EPS of negative 1.0, a pre-revenue company operating at a loss, and that debt-to-equity ratio over 43, which is extremely high for a company not yet generating revenue. While the lease deal could change things, for now, based on the current financials and past volatility, our market commentary suggests stay away from FRMI.
Moving on to Genius Sports, GENI. This stock, never before featured on our podcast, is gaining attention for its foundational role in the rapidly expanding sports betting industry. Users are calling it a data monopoly, pointing to strategic partnerships with the NFL, which even holds an equity stake.
Now, the revenue growth of 30.5% is definitely robust, Ethan, confirming their strong top-line expansion. But again, the current net profit margin and EPS are negative, which is a red flag for profitability. However, the analysis does attribute this to one-time acquisition costs, with expectations of improved guidance.
Exactly. That context is key. The stock is currently trading at $4.24, significantly below its 52-week high of $13.73, and analysts still have price targets averaging $10 plus. Plus, institutional investors like Cathie Wood and Larry Robbins have recently opened positions, signaling confidence in its undervaluation and future. Our AI-generated insights point to buy for GENI. Finally, let's discuss Advanced Micro Devices, AMD. Our AI detected a bearish post suggesting a bubble burst, but the community sentiment was overwhelmingly bullish, rejecting that idea. This stock has seen a lot of action on our podcast, most recently rated stay away in May 2026. That's right, Brooke. Users highlighted AMD's incredible rally from 190 to 460 in just a couple of months, dismissing a 3-4% dip as mere profit-taking. There's strong long-term confidence in AMD and the semiconductor sector, with talk of AI ambitions and significant insider purchasing.
I get the optimism, but my KPIs are screaming caution here. The price-to-earnings ratio is an astronomical 140.897. That means an immense amount of future growth is already priced in, making it a very high-risk entry point. Also, a debt-to-equity ratio over 6 is quite high, and being so close to its 52-week high after such a rapid ascent suggests it could be overextended. While the company's prospects are strong, the current valuation suggests stay away from AMD.
All right, Brooke, let's recap today's contenders for our deeper analysis. Investigate as buy, Applied Digital Corporation, APLD, Genius Sports Limited Ordinary Shares, GNI. Investigate as cautious buy, none. Investigate as speculative gamble, Fermi Inc., FRMI.
And that wraps up another episode of the Daily Hunt for Multibaggers.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advice before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in, and we'll catch you next time for more insights from the Daily Hunt.
Happy hunting!